Hi and welcome to this combined tutorial which deals with a couple of trades for the 10th of October and also answers the question of how to deal with contrarian signals as well. Before we get into it, let's have a look and see what we've got. At the moment we've got a trade that is already filled, as you can see from the filled green circle there. So we've got a buy signal in progress, and for some strange reason I forgot to press the record button prior to this trade being filled, but I'm actually in the trade, as you'll see as we go along in this video. So I'm currently buying the market, looking for higher prices, and the first issue that I actually have is this resistance area here, which is the psychological resistance area of 159.50. So the market's got to get through this area. It's been up to it a couple of times and so far failed. However, this bar here, as the market moved up and then turned around and came back towards the lows, has now offered a sell signal with the entry price just around this area here. You can see the entry there, and then we've got the stop there, the scalp, sorry, and then the stop there. This sell signal has appeared purely and simply because the market reversed and came back down. So if it goes through this stop, we'll then consider going short, and the market would of course need to break below the support that we see in this area here. So the market would have to go through there, and I've also put on a 0% extension as well, which it would have to go through. So effectively the market's trading in a range, and we can see this very narrow range of around about 30 to 40 pips there. We're presented with a short, a potential short, should the market fail to go through the 159 area. And I do apologise for the voice for some unknown reason. It's sounding pretty ropey this morning, just the remaining vestiges of a cold. I've got this running now in real time. You can see the price is moving, and then we're just going to move on any second now. Like I say, yesterday it was over 5 hours worth of recording. Now trying to distill it down into just a few minutes for you. What's happened now is that we've not only got the current trade that we're actually a buyer of the market of, we've got the potential short should the market fail to move higher through this psychological level that we were looking at earlier. I'm just going to remind you of that, which is there. And failure to do that, returning to the downside, we'd end up going short with its problems as well. The market's moving to the upside, and now because it's reversed, we're now presented with a new buy signal, which we can also see as well, and that's just there. We can see this new buy signal there to the upside. It's a case now of what happens if the market continues to move higher. The question is, what happens to this sell signal that we've got here that was produced from this bar here? Well, the best thing to do is to play the video, and I will show you exactly what happens. So the market's starting to move high. You can see the buying coming into the market there. And effectively what will happen is, as prices drive through, there you go, you can see it's gone through the stop area of the potential signal, and that cancels the trade, because if the stop's hit before the entry price, the signal becomes invalid and it is removed from the screen. Prices are also now going through the 159. We're still buying the market from our original position here, and let's just move on a bit. We can see that we've gone through, we've driven through this area. We've got a problem at the a bit further up now as well, haven't we, with the where the extension's actually shown. So we've got this resistance area up here that we need to actually drive through as well. Hopefully, because we're actually through the area of resistance here, the psychological area, we could effectively get through this area, but it's a case of the market needing to drive with an increase in volume. But let's see what actually happens here. So the market remains sideways, continues to struggle with the resistance over to the left. And then we see the market trade through the scalp. We see the scalp message appear on the top right. Now at this point, as the market has struggled all morning, I took the decision to actually stay with the trade. I thought there's no point in getting out. The market looks like it's broken out now, and all of the trades earlier in the week where I'd got out with the 20 pips, the market had continued on to do 40. So I thought, well, I've sat through this for the last 2 hours, so I'll wait for the market to show its hand and see if it can continue to move higher. Plus, we were also through the psychological level as well, so to me it made perfect sense to actually stay with the trade. So that's what I chose to do. But as you can see here, we've got a straight reversal down off these highs. The market's just come straight back down, gone through the previous high over to the left here, which we can see there and there, and then the market's just come back down. The only thing to do is to stay with the trade. And what I decided to do was, having given up all of these points, was to just move the stop to break even. I was hoping for the market to break out through the 159.66 area. It did do, and then failed to continue higher. Again, we can just watch what happens here. We get back to the 159, you think the market's going to be fine, and as we approach the break even, I've switched to the Alpari account, and as the prices get down towards this line, I decide to close out the trade, giving up the 20-point profit there. It wasn't one of greed, it was one purely based upon the pattern that had happened in the previous trading days. When the market had broken out of these sideways moves, the market had continued. But for whatever reason on this occasion, Murphy's Law or whatever you want to call it, the market decided to come back down to the entry price. So no great shakes, nothing lost, and there you see the market continuing lower as well. So to come out at break even was the right decision, even though no doubts I could have actually taken some of the money. And before we get to the end of this video, or near the end, I will tell you another technique that I actually use, which I haven't written about, but I'm going to discuss and also show in future videos. So we'll look at that. There's a way of actually taking money off the table and moving the stop to break even as well, but we'll look at that a bit later on. So the market's made a huge turnaround and come back, and then remain sideways. It's also come back below that psychological level, and then as the bar completes, we get another sell signal. So we've had two buys. Well, we actually had a short off here and another long off here, which is being filled. I don't know quite why, because I didn't get an automatic markup there, but that's irrelevant because I'm already in from the first one anyway. And then as the market's reversed, we've got a new sell now. This is turned up. Once again, it's a case of having to follow the market, see what the market throws at us. I'm not in the market at the moment, I'm out. And another half an hour later, we see the market sideways and then finding support at this area. Notice the market hasn't breached my original stop loss here as well, so there could be an argument for sticking with the original stop, but there's no point in watching a profit turn into a loss. I don't mind coming out at break even, but I'm certainly not going to watch it come back down to 22 points potential loss. I don't mind risking that at the outset because obviously the market hasn't moved, but once it's moved and shown a profit, then I'm not going to give up anything below break even. The market finds support, the sell signal still in place. The second one there came down towards the stop area and stopped out, but like I say, well, the concern really isn't with that particular one because the original trade is over here. The market's finding support, and guess what? The completion of this bar, we now find ourselves with a long. So what do we do with the short? Well, as the stop hasn't been hit in the short, we will stick with that on the basis that if the market goes through, then we'll go to the downside. So it remains valid as long as it's on the chart, and it will only disappear for two reasons, and that's if the order isn't filled within 3 bars of the signal appearing. So we've got this third bar now. If it hasn't been filled to the downside, that signal will disappear, and as we saw earlier, it will be removed from the chart automatically should the market hit the stop before the entry price. The market's now sideways, starting to move higher, and again stuck at that 159.50 area. Just a sideways day really. Now I'm just going to pause the video. You just noticed that the signal disappeared. I'll just rewind it for you so you can see the signal disappearing off the chart just in case. So there's the sell signal there. You can see it there, and then as soon as I start the video again, you can see it disappears as soon as we start to draw that fourth bar. The order wasn't filled in 3, and therefore the signal becomes invalid, so that's been removed off the chart. So now we're left with this new long. We can see the signal's just been hit. It says qualified up in the top right there. I'll just highlight that for you there. You can see that there, qualified at 15.40. And let's just continue to play. Again, we've got to drive back through this 159. You can see me placing the trade there, new order, and I'm just going to buy the market there. And so we're in the market, and the market starts to move back towards the psychological 159. Let's just go back to this bar, and spends most of its time doing that. Again, I'll just bring this one to your attention. This is the bar I'm talking about, this one here. And then when it completes, the market starts a new bar and drives through the resistance there and is heading up towards the scalp area. Let's just restart the video, and we can see there's a bit of selling coming into the market there. Price is trading sideways, which you'd expect after breaking through that resistance. What we need is for the market to hold above that resistance area, which it does, and then we see price is hitting the scalp, which you will see in here somewhere. You can see that the scalp has now been hit, as we had earlier on in the day when it was hit around this point off the first signal. Sorry, it's actually there where the first scalp was. And again, as the market's broken out now, I believe, right, let's stick with the trade, and hopefully the market will continue to move to the upside. So the market's through, we've hit the target, we're breaking through the target, it's all looking well. There's profits on the table that you can see here. We've got over 17 points, or 17 pips, whichever you prefer, in the trade there. And the market's holding its own there. But then half an hour later, the market has found some resistance. If I can just pause the video. Let me just come back just a second for you there. So the market's gone through the resistance, which we can see, and is now actually struggling at the scalp area, which is just there. So what I'm looking for the market to do, I don't mind it taking a breather, because markets don't continue up in one long upward move. Although looking at this, you could actually say, well, you know, we've had 1, 2, 3, 4, 5 green bars. There's got to be some red coming into the market, and we see the red ones starting to appear. But I'm still in the market at this point, and hoping the market's only going to take a breather. And also another important thing here is going to find support, because once the market breaks through an area, and generally when it closes through, as it did here, it will then sit on this sort of level here and actually just, whoops, wrong one. What I was after was this one. It will actually hold at that sort of extension level. So the market will break through a resistance level, of which will become a new support area. I'm happy to stay with the trade for that very reason, but unfortunately that new support area, just like we saw earlier, isn't holding as it did here. Let me just get a highlighter for you. It didn't hold when we went through on this occasion, and then again once the market came through, it headed back down towards the break-even area, which you will see in just a second. And there's the inside of the MT4 account, and you can see the market coming down towards the break-even. I had to go out as well. It's now beyond 6 o'clock. We were out for dinner by 7, so it was a case of, well, I might as well just have the few pips that are on here. Had I have been at home for the remainder of the evening, then I would have probably stayed into the break even, then looked for a way to re-enter the trade, but there was nothing else, and that was it for yesterday. So I gave up somewhere in the region of around 35 to 40 pips, which may seem madness, but as I mentioned earlier in the start of the video, I'm looking for more than 20 pips out of a trade, and this happens to be just 2 consecutive where that wasn't to be the case. Yet if you look back in the week, earlier in the week, at the other trades that I've recorded, you will see the market's gone way through the 20 points. Once it's broken out of the sideways move, has continued to move higher. In fact, let me just bring up the software which is trading live at the moment. I'm just going to slide this in here, and then we can just move back to earlier in the week. If you want to go back and see all 7 days in one go, you can go to the navigation button and then click last 7 days, and this move here was over 50 points. The same, this one was 45 points. So yesterday I was working on the basis that we might get it, and in fact we did get the 50 points. Let me just reset this. We got them on the overnight market, and prices ended up going up around about 45 points. And this morning, this is October the 11th, we've had a sell that's not been filled. We're just up to the 3rd bar, so we got some contrarian sideways markets again today. Markets come back. That's now offered a new buy, so if the market goes up and goes through there, we'll go on the long side. And if this bar when this bar completes, not if, when this bar completes, then the sell will disappear off the price chart. So you can see October the 10th sideways, still offered profits, and you'll always get that situation, because once the market's coiled itself into a sideways move, it will break out eventually and then move to the upside. That's where we're at with contrarian signals. That's how I approach them, and just to recap, they will be removed if either the stop is hit before the entry or it is not filled within the 3 bars. And just finally, not a new technique, it's new to you, but a technique you can actually use is to make sure that you actually trouser some of the pips that are available in the market. It's a technique I use as well, but I haven't used it in these videos yet. I will teach you how to do it in future ones. When we get to the scalp, is to take off 50% of the trade. So if you're in a pounder point, take off the 20 points at 50p and then leave 50p fishing, and if the market comes back, take it out at break even. So that means you end up making a few pips out of the trade and still leave a small bet, modest bet, or 50% of the bet. If you're betting £100 a pip or £10 a pip, you're leaving 50% of the original stake fishing. So if the market takes off through some unofficial economic news item or something like that, then you still got a line in the water, as it were, so that you can still take advantage. I didn't do that yesterday because I wanted to keep this simple, but I will introduce that concept into the videos at some point just to show you how to execute it. That's it for now. I will see you in the next video, and as ever, thank you for watching.